Hi guys, welcome to today's video on the market update of Alibaba. Here's the agenda for today. I'll be going through Alibaba in general as a business. Then I'll go through 4 reasons why I'm diamond handsing on Alibaba. Thereafter, I'll do a short technical analysis on Alibaba. Before we begin, here's a quick disclaimer. Alright, let's get into the video. Alibaba is one of the largest e-commerce companies in the world. Their core business comes from their e-commerce platforms Taobao and LAZADA. Other notable sectors that they actually compete in are Alibaba Music in entertainment, Alibaba Cloud in cloud computing, and Ant Financial and Alipay in the financial services industry. Over the past month, the Alibaba stock price has been tanking again. The first reason was due to how the media spanned Alibaba's third quarter earnings result to be very bad. And the second reason was due to the Omicron Variant. And the third reason was Didi's delistment from the New York Stock Exchange, which led to mass panic among Chinese ADR stocks. First reason why you should diamond hands Alibaba is looking in comparison to their peers eBay and Amazon. Their monthly active users of 925 million is far superior to both of them. Their gross merchandise value of 1.239 trillion is also more than double of both eBay and Amazon combined, boasting a 5-year revenue growth of 46.7% and net income margin of 19.3%. Alibaba looks superb compared to its peers. The second reason why I'm diamond handsing Alibaba is that Alibaba has a very low chance of being delisted from the US markets. We all know that Didi recently got delisted from the New York Stock Exchange, but we need to know the reason why. So here's some backstory. The reason why Didi was actually delisted was because before they even IPO'd in the first place, Chinese regulators actually told Didi to wait for the regulations to be passed before they list on the New York Stock Exchange. But Didi basically said screw you to the Chinese government and listed ahead, ignoring the Chinese regulators. And this pissed off the Chinese regulators. And when the Chinese government is pissed off, we all know what happens. So this is definitely an isolatory event. Now we need to know what the Chinese government thinks about their Chinese companies listed in the US markets. So this source is actually from the Chinese Securities Regulation Commission website. And I'll put a link down in the description below for you guys so you can refer to it. So actually from the excerpt here you can see the underlying portions are saying basically that the Chinese government is open and is okay with Chinese companies listing on the US markets as long as they follow the appropriate regulations, checks and abide by the rules before they actually list on the US markets. They even go on to say that some political forces in the US have actually tried to force some Chinese companies to delist from the US markets in recent years. So on the US end, what they are saying is that they require all Chinese companies listed in their markets to be fully regulated by them within the next 3 years. If the Chinese companies do not comply, they will be forced to delist from the US markets. So even if there is a delistment, it's going to happen in 3 years, not now. So relax. Furthermore, Alibaba is actually regulated by PwC and their financial statements are published according to the US GAAP, which is approved by the SEC. So no issues there. Even if they really delist, one Alibaba share, the BABA ADR share, can be traded for 8 Hong Kong 9988 shares. So do not worry, all is good. The third reason why I'll be diamond handsing Alibaba is with regards to their bad earnings report, which the media actually spanned and made it look really bad on Alibaba. So first we got to look at their revenue, which came in at about $31.14 billion, which was a 29% year-on-year increase compared to their previous year. This was a slight miss on the estimates, but even so, with all the tech regulation crackdowns, the Evergrande crisis, more regulations, and the Chinese economy slowing down in general, this is still freaking amazing. But the one that people made the most noise about was the $4.4 billion in net income, which was a 39% year-on-year decrease. And everyone was panicking and saying that this was really bad. But why? Alibaba still made money. So why did Alibaba's net income fall? Alibaba's net income fell because they made a $1.6 billion investment into Taobao Deals, LAZADA, local consumer services and consumer marketplaces to actually help to drive future earnings potential growth. If we remove this $1.6 billion investment, then net income will actually be unchanged year over year. And this was actually very similar to what Amazon did a couple of quarters ago when they actually heavily invested into their future earnings potential growth. And as a result, their stock price sold off. Alibaba's international consumer base grew by 8% quarterly, and this is about 30% annualized. So this showcases Alibaba's reduced reliance on the Chinese market. Their cloud computing also grew by 33% and their e-commerce grew by 31%. So we all know that cloud computing is definitely a higher margin business as compared to e-commerce. And if we compare them to Amazon again, Amazon's main source of revenue currently comes from Amazon Web Services, their cloud computing service. However, Alibaba's main source of revenue still comes from their e-commerce platform. And can you imagine what Alibaba will be like when their cloud computing business begins to take off and continues to grow? My fourth and final point why I'll be diamond handsing on Alibaba is with regards to their valuation and the current market price that they're trading at. Before we look at their valuation, let's look at some of their key metrics. So first we can see that their net income and revenue have been consistently increasing over the long run. Their cash growth has also been outpacing their debt growth, and their operating cash flow and free cash flow has also been increasing consistently as well. As you saw the growth rates Alibaba were performing at earlier, I'm actually using a very conservative growth rate here of actually 10%, projecting that they'll grow at 10% for the next 10 years. So with this, and with a discount rate of about 8.5%, I already get a share value of $200, which is almost a 38% discount from their current share price. So if I actually want to be a bit more aggressive and presume that over the next 5 years, they get over all these regulations and technological crackdowns from the Chinese government, and they go back to a 20% growth for the 6 to 10 year mark, I get a $300 valuation for Alibaba, which is almost a 60% discount on the current market price. Moving on to some technical analysis, let's look at the Alibaba chart. So looking at the Alibaba chart, we can see that it is actually in a long-term downtrend with the price below the 200 EMA, which is this yellow line over here. And usually in a downtrend, I do not like to add shares to dollar cost average in my position. Yeah, so what we might actually want to look for is actually a potential reversal of the trend, maybe a higher high and higher low, and that will signal maybe a short-term change in trend, so maybe a short-term uptrend. If we're looking for a more medium-term uptrend, we can look when the 50 EMA, which is this purple line, crosses above the 150 EMA. That'll give us a medium-term uptrend. And if we're really looking to confirm the long-term uptrend, it is when the stock price will go back above this yellow 200 EMA. And that's when we can maybe decide to start adding back some shares and sizing in our position slowly into Alibaba again. Wrapping up, Alibaba's business fundamentals still very strong. Their delisting risk is no issue, and their bad earnings is bullshit. Their valuation is cheap as chips now. However, if you're still worried about the Alibaba ADR being delisted, you can just buy the Hong Kong listed Alibaba, ticker 9988. And also please understand that Alibaba is a Chinese company after all. So please do not overexpose yourself to the Chinese market and have some proper diversification so you don't see Xi Jinping at night in your nightmares and you can sleep in peace. Hope you guys found this BABA market update useful and insightful. Please like, share and subscribe, and let me know if you have any other stocks you would like me to do this on in the comment section down below. As always, may the markets be in your favor, and I'll see you in the next one.